The financial world is about to change forever. China gives the middle finger to the IMF and World Bank.
In the last 20 years, China has become the single largest official lender to developing countries, dwarfing other multilateral institutions like the World Bank, the IMF, and the countries that make up the Paris Club.
The World Bank has said that China's recovery remains fragile.
Under pressure, the World Bank had earlier vowed to gradually decline lending to China.
Emerging market economies, led by China, decide to replace rather than reshape today's institutions.
The International Monetary Fund and the World Bank are making lots of positive noises about the new China-led Asian Infrastructure Investment Bank.
Have you ever thought about what it would be like if a major country just walked away from the biggest financial institutions in the world? Can you imagine the ripple effects if a powerhouse like China decided to set up its own financial systems? And what if this move started to change the way global money flows? Well, that's exactly what's happening right now. Hey guys, welcome back. Today, we're diving into an earth-shaking development. China is saying no to the IMF and the World Bank. This isn't just a headline. It's a seismic shift that could change everything we know about international finance. Picture it as a top athlete quitting the major league to start their own league. Why would China make such a bold move, and what are the implications for the rest of the world? We're here to explain it all in plain and simple terms. Think about it like this. You've always played by someone else's rules, but now you're creating your own rule book and inviting everyone to join your game. That's China's strategy in a nutshell. They are stepping away from traditional Western-dominated financial institutions and paving their own path. This isn't just about money. It's about creating a new global order. Stick with us as we unpack this fascinating shift, how it's unfolding and what it means for the future of international finance. Trust me, you're going to want to hear this. All right, let's dive into the first chapter, China's strategy. So what exactly is China up to? Well, imagine you've been playing a game where the rules were made by someone else, and now you decide it's time to make your own game with your own rules. That's pretty much what China is doing. They're looking to break free from relying on US-based financial giants like the IMF and the World Bank. Instead of sticking with the old playbook, they're writing a new one that suits their style and goals. But why is China doing this? It's not just about money. It's about power and influence. By stepping away from these traditional institutions, China is trying to boost its own clout in global finance. Think of it like being in a club where a few members always call the shots. China wants to create a new club where they have more say in what happens. This move is all about giving themselves and other developing countries more options and a stronger voice on the world stage. This strategy isn't just about China looking out for itself. It's also about offering a helping hand to other countries that feel sidelined by the current financial system. By creating new financial pathways and institutions, China is aiming to provide alternatives that could be more attractive to countries looking for support without the strings attached by the IMF and World Bank. So, in essence, China is saying, let's change the game for everyone.
中国始终遵循国际规则，基于公开透明原则同发展中国家开展投融资合作，不附加任何政治条件，不寻求任何政治私利。
Let's move on to the next big piece of the puzzle, the Asian Infrastructure Investment Bank, or AIIB. Think of the AIIB as China's answer to the IMF and World Bank. Launched in January 2016 with a hefty starting fund of $100 billion, this bank has been growing like wildfire. By the end of 2020, it already had 103 member countries on board, covering a whopping 79% of the world's population and 65% of the global economy. Fast forward to 2024 and the AIIB has expanded to include 109 countries. That's a lot of people and a lot of economic muscle.
China's initiatives have fewer resources than the World Bank, but they are big enough to finance significant infrastructure projects.
So, what does the AIIB actually do? Well, it's all about building and improving infrastructure across Asia. Think roads, bridges, power plants, and water systems. But the AIIB isn't just throwing money at any project. It focuses on sustainability and connectivity. For example, they've funded a $100 million loan to enhance water supply and sanitation in Bangladesh. They've also pumped $144.7 million into a project aimed at controlling flooding in West Bengal, India. These are the kinds of projects that can make a huge difference in people's everyday lives.
World Bank President Jim Yong Kim was gushing in his praise, saying the need for infrastructure in the developing parts of Asia is enormous, and he pledged to work very closely with the AIIB.
And it doesn't stop there. The AIIB is also big on renewable energy. They've backed solar and wind power initiatives in countries like India and Turkey, helping to push the world towards a greener future. Imagine having a neighborhood that's powered by clean energy, with reliable infrastructure that can withstand natural disasters. That's the vision the AIIB is working towards, and it's a major part of China's strategy to reshape the global financial landscape. Now let's talk about another key player in China's new financial game, the New Development Bank, or NDB, also known as the BRICS Bank. This bank was set up in 2014 by a group of 5 major emerging economies: Brazil, Russia, India, China, and South Africa. Together, these countries are known as BRICS. They kicked things off with a solid $50 billion in initial capital, ready to fund big infrastructure and sustainable development projects. So, what makes the NDB different from the IMF and World Bank? Well, it's kind of like comparing a local credit union to a big national bank. The NDB is more focused on the needs of its members and offers financial support with fewer strings attached. While the IMF and World Bank often come with a lot of political conditions and requirements, the NDB is more flexible. This means countries can use the funds more freely to meet their own development goals without being tied down by strict rules.
Christine Lagarde, managing director of the IMF, said an institution that will focus on infrastructure on a regional basis is actually an attractive proposition. And she stated the IMF was also excited to work closely with the China-led bank.
The NDB is all about empowering its member countries to take control of their own development. For instance, it provides loans for projects that improve infrastructure, like building roads and power plants, as well as initiatives that promote sustainable development. This approach allows countries to grow in ways that best suit their unique needs and circumstances, giving them more autonomy and freedom to shape their futures. The NDB is another piece of China's strategy to create a diversified and more balanced global financial system. Next up, let's explore the Belt and Road Initiative, or BRI.
我们的共同目标是携手努力让各国互联互通更加有效。
This is another major part of China's strategy to boost its economic influence around the world. Launched back in 2013, the BRI is like a massive global construction project. Imagine a spider web of new highways, railways, ports, and energy pipelines spreading out from China to the rest of the world. By 2024, over 140 countries have jumped on board with the BRI, covering more than 60% of the world's population and over a third of the global economy. So, what does this look like in real life? Take the China-Pakistan Economic Corridor, or CPEC, for instance. China has poured $62 billion into this project, creating a network of roads, railways, and pipelines that stretch from China to Pakistan. Then there's the Addis Ababa-Djibouti Railway in Ethiopia and the Mombasa-Nairobi Standard Gauge Railway in Kenya. Both are game changers for local economies, making it easier and faster to move goods and people. In Southeast Asia, there's the Laos-China Railway, a $6 billion project that connects Laos to China, promoting regional integration and economic development. These projects aren't just about building infrastructure. They're about building connections and boosting economies. The BRI is China's way of saying, let's grow together, and it's changing the landscape of global trade and development. Through the BRI, China is creating new pathways for economic growth and strengthening its ties with countries around the world. Now let's talk about another key piece of China's financial puzzle, the Cross-Border Interbank Payment System, or CIPS. You know how when you want to send money to someone in another country, you usually go through a bunch of middlemen and it takes forever? Well, CIPS is like a shortcut that China has built to make international transactions smoother and faster, kind of like a new express lane on the highway of global finance. Launched in 2015, CIPS is China's answer to the SWIFT system, which is currently dominated by the US. Instead of relying on the US dollar for international transactions, CIPS lets banks all around the world trade directly using the Chinese yuan. And guess what? It's catching on fast. By 2022, CIPS had over 1,200 banks and financial institutions from 103 countries and regions using it. So why does this matter? Well, first off, it cuts out a lot of the hassle and cost of going through multiple currencies. With CIPS, banks can deal directly with each other using yuan, which means lower transaction costs and less currency risk. Plus, it's part of China's bigger plan to boost the global status of the yuan. In just a few years, the yuan's share of global foreign exchange reserves nearly doubled, showing that more countries are starting to trust and use it. It's like China is building its own financial highway and inviting the world to join the ride. All right, let's talk about China's big push to make its currency, the yuan, a player on the global stage. It's like China saying, hey world, check out our currency. So, how are they doing it? Well, they're making deals and shaking hands with countries all around the globe. One way China is doing this is through currency swap agreements. Think of it like exchanging snacks with your friends. You give them some of yours, they give you some of theirs. China has signed these agreements with over 40 countries, totaling a massive $500 billion. These agreements make it easier for countries to trade with China using yuan instead of dollars, euros, or other currencies. And remember CIPS? Yeah, it's not just about making transactions smoother. It's also helping to boost the yuan's street cred in the global market. By using CIPS, countries can settle trade deals directly in yuan, cutting down on costs and showing that the yuan is a reliable currency for international trade. And guess what? More and more countries are starting to stash yuan in their foreign exchange reserves, showing that they trust it to hold its value. It's like the yuan is slowly but surely making its way into the wallets of countries around the world. Now let's talk about the changes China is making to attract more friends and investors to the party. Picture China as a host, throwing open the doors to its economic house, inviting everyone in for a look around. One big change they've made is loosening up restrictions on how much of their economy foreigners can own. It's like they're saying, hey, come on in and make yourselves at home. They've relaxed rules in sectors like banking, securities, and insurance, making it easier for foreign companies to invest. And you know what? It's working. By 2023, foreigners had snapped up around $500 billion worth of Chinese bonds. That's a lot of trust in China's economy. But China isn't stopping there. They've also built bridges between their stock markets and those in Hong Kong. It's like they've laid down a financial highway between them, making it easier for foreign investors to buy and sell stocks in China. This move has boosted liquidity and made it simpler for investors to get in on the action. Plus, in 2017, China set up the Financial Stability and Development Committee. It's like having a watchdog to keep an eye on things and make sure everything runs smoothly in the financial world. These reforms show that China is serious about playing nice and making its economy more attractive to the rest of the world. And guess what? It's paying off big time. So here's the bottom line. China isn't just playing the game, it's changing the rules. With strategic moves like developing alternative financial institutions, promoting the yuan on the global stage, and shaking up its own economy with reforms, China is reshaping the world of finance as we know it. By saying no thanks to the IMF and World Bank and forging its own path, China is becoming a major player in global development finance. It's like they're building a new financial neighborhood, where they have a big say in how things are run. And you know what? This isn't just about China, it's about the whole world. As China's influence grows, it's bringing new opportunities and challenges for countries everywhere. Whether you're a small business owner or a big-time investor, what happens in China is starting to matter more and more. So keep your eyes on China because the game of global finance is changing, and they're leading the charge. Thanks for joining us on this journey through China's financial revolution. Don't forget to hit the like and subscribe button. And to watch the latest geopolitical news, watch this video here.